My name is Susan Procht. We wanted to go ahead and give everybody another few minutes to join, and then we will begin. Again, we'd like to welcome and thank everybody for attending our webinar today for Surviving the ERCOT Summer 2012. Today, both Hudson Gilmer, who is over our Commercial Markets Group, as well as Kyle Bissett, head of our ERCOT Analyst Desk, will be presenting. We'll keep it fairly informal with questions. Feel free to ask a question during the presentation or type one in onto the GoToMeeting tab at any time, and we'll address those as we can. From there, I'd like to go ahead and pass it off to Hudson.
Thank you, Susan, and thanks to everyone for joining today. We had a similar webinar at the end of April, and it was very well attended, and there were actually a number of people who weren't able to join at that particular time and requested that we reschedule this. It's taken us a little while to do that. For those people who are on and we're waiting, we apologize. But it has also given us kind of time to change the format a little bit. What we'll talk about will also incorporate some of the feedback that we've gotten from customers of the PowerBuyer products that we launched back in April. We have a range of clients who are using that service, including retailers, including municipal utilities, including industrial customers, large industrial power users, and cogen owners, and even merchant wind farm operators. And so over the last couple of months, we've worked with them, we've understood their needs, and then tried to incorporate some of that in what we'll share with you today. And again, as Susan mentioned, please do, as we go, just use that chat box to enter any questions, and we'll try to respond to as many as possible. So before we jump into the webinar, what I'd like to do is just do a quick audience poll on what you see as the biggest factors driving ERCOT prices this summer, especially with an eye back towards what we saw last summer. So these are the choices our expert panel has put together. Number one is weather/heat. Our meteorologists look hard at this stuff. They feel like we're still in drought conditions, especially for the western and southern parts of the state, which raises demand risks. And their seasonal forecast is showing above average forecasted temperatures for the summer. So number two is ERCOT rule changes. There's been a bunch of them, and it's tough to keep track of all of them. Our analysts know this stuff better than I do, but some of the big ones include a change of 500 megawatts of generation from non-spin to responsive reserve, increase in the non-responsive price floors, increase in the system-wide offer cap to 4,500 effective August 1st, and also price floors for RUCT units. So option number three is a healthy supply stack. As I'm sure many of you have seen, we had extensive outages, scheduled outages in the spring, just to make sure that a lot of that generation is ready to run during the summer, and even some units that were pulled out of mothball status to ensure that we've got a healthy gen stack for the summer. Fourth, obviously, kind of stating the obvious, record low gas prices, Henry Hub at 250. What does that do to, obviously eliminating that step between coal and CCs, but also potentially change the way that both gas and coal units behave. And then the fifth is risk-averse participant behavior, both among folks who are the load-serving entities wanting to avoid the real time and the risk of price spikes, as well as generation who may be shifting into the real time to avoid missing out on those spikes. So let me figure out how we do this. I'll give you all the opportunity to cast your vote. So the poll's open. Choose the one that you think has the biggest impact, and we'll circle back later in the webinar and have Kyle and myself kind of weigh in on what the analysts here think is the biggest one. So I'm going to close the poll in 5 seconds. Enter your vote now. Okay, thanks. So let's jump into it. The agenda for today, I want to start with just a real quick introduction to Genscape for those who aren't familiar with the company and what we do. And then we'll kind of dive into the meat of the webinar. What we'd like to do is look back at historical data for the second half of 2011, June through December 2011, looking at that 6-month period and then also drilling into the 3 months of June, July, August, kind of the ERCOT summer, and compare different buying strategies, compare the day ahead, the real time, and look at PowerBuyer as a tool to help determine which market to place load into. Then what we'll do is introduce the ERCOT PowerBuyer product. We'll have the head of our ERCOT desk, Kyle Bassett, actually take you through this morning's report so you can see a sample of what our clients get every day. Walk you through the summary, the market drivers, and the recommended buying strategy that we're calling for tomorrow. But then also explain a bit of what's behind it, the fundamental model that's used by the ERCOT analyst team, how we do things like demand forecasting and building our supply stack and recalibrating the model every day. And then finally, we want to wrap up with how some of our clients are using this product. And we'll do kind of application profiles of 3 different client types, looking at retailers, looking at industrial users, and finally merchant wind operators. And we'll jump right into it. So quickly about Genscape. Genscape's been around for a little over 10 years, actually got its start serving power traders and was founded by a couple of ex-power traders who really felt like there was an important piece of data missing to inform their trading strategies, and that was visibility on what power plants were doing, real-time generation visibility. So most of you, especially in the power world who are familiar with Genscape, may be also familiar with maps like the one on this screen. We currently monitor the vast majority of large power plants across the country. We have a patented monitoring technology that measures the electromagnetic field of power lines and can show the clients, the users, the output, the estimated output of what those large power plants are doing. And have great coverage in ERCOT as well as other regions nationally. But over time, we've grown, we've expanded into other commodity areas like natural gas, oil, where we do things like monitoring flows on pipelines through nominations data. In the oil world, we have storage estimates, we have pipeline flows, refinery monitoring, and so forth, and expanding into agriculture. And on the power side, most of the large trading shops are clients of ours. In fact, 25 of the top 25 power trading firms are clients. Specifically, in the area of what we call market intelligence, we have a range of what we call Power IQ products across all of the ISO regions. And these are subscription-based services that provide daily reports to our clients on short-term price forecasts. So we're running security-constrained unit dispatch models. We have a team of about 50 combination of developers and analysts and meteorologists who run these models, develop these models, capture all the data, feed it in, and put out price forecasts and market driver analysis for clients in all these regions. PowerBuyer is a bit of a departure for Genscape. It's the first product that we've developed that's not geared towards a kind of a speculative trading shop. It's geared more towards the physical participant who's managing load or managing generation, and so that's really what we'll get into here. And PowerBuyer is really geared towards that daily decision of where should I put my load for tomorrow? Should I put it in the day ahead? Should I put it in the real time? What are the risks associated with the real time for tomorrow? And we'll jump into a whole bunch of detail there. But for each of these services, we include daily reports, price forecasts, access to our analysts, and also XML data feeds. So jumping into PowerBuyer at a kind of almost absurdly high level, the goal is to provide a tool and a methodology for entities who are actively buying in the daily ERCOT wholesale markets, the DAM or the real-time market. And if you think of the two options that are currently available, it's putting your load in the day-ahead market or the real-time market, and there's obviously trade-offs between those two. For the day-ahead market, you've got less risk. You don't have the risk of a unit tripping off in the real-time and driving price spikes, but you pay for that reduced risk in terms of prices that over the study period averaged about 13% or I believe 11% higher than the real time. And conversely, in the real time, you do have savings on average, but you have more exposure to those daily price spikes. And if I go into just a little more detail, what you're looking at here is a histogram of the study period of price distribution, hourly price distribution between June 1st and December 23rd of 2011. And the blue line is the day-ahead market, the red line is the real-time market. What you see here is while they track fairly closely overall, there's some important differences on the extremes. So the day-ahead market extends further on the low end of prices down to $0 per megawatt hour, and further on the high end up to the current price cap of $3,000 per megawatt hour. Whereas the day-ahead market is confined to a narrower band and also has more frequency of prices in the kind of mid to high range of $60 to $150. So a simple average of all hours over this period shows you that The day-ahead prices are $59.21 on average, compared to $53.18 for the real-time. And so that translates into an 11.3% premium for the day-ahead. But you also see for those statistics buffs that the standard deviation is wider for the real-time than it is for the day-ahead. So you might look at this and say, no big news here. 11% is a fair premium, a fair risk premium to put your load into the day-ahead market. But what this hides is the daily and even hourly volatility that you see and price separation between the day-ahead and the real-time. And this slide shows you, it's kind of a blatant illustration of that daily separation. This is just picking the two of the highest demand and highest price weeks from last summer. And what you see is in the first week of August last summer, as an entity who's buying load, you would have been better served to bid into the day-ahead market because the blue lines or the blue bars, it was consistently below the real-time. But then if you had continued with that strategy into the subsequent week, into the second week of August, it completely inverted, and you would have been much better off putting your load into the real-time market, or letting it ride into the real-time market. So to go even another step deeper, one approach to look at these strategies and compare them, if your objective as a power buyer is to minimize your average price of power, is to use a candlestick chart. And here what we've done is bound the green area of this candlestick with the extremes of several different buying and selling strategies, some of which are realistic and some are not. So at the top end, you've got what we're calling the optimal sell scenario. And this is the price, the average price during this period that you would have paid or received if you're a generator, if you had perfect ability to pick the highest market day-ahead or real-time for every hour. So in other words, you had a crystal ball, and for every hour you put your load into the most expensive market. So that's 71.9. So that's, for a power buyer, a worst-case scenario. On the other extreme, $40.50 would have been your simple average price if you had perfect visibility and put your load into the cheapest market for every hour over that period. So both of those are kind of the logical boundaries, but not the realistic boundaries. And then if we go a little more realistic, an entity who puts all their load into the day-ahead market would have paid a simple average of $59.2 per megawatt hour. And that would have come down to 53.2 if they'd put everything into the real-time. If you'd used PowerBuyer, and PowerBuyer had informed your decision hour by hour for the next day of where to put your load, you would have gotten down to $51.5 per megawatt hour. So you would have outperformed the day-ahead market by by 14% and outperform the real-time market by 3.7%. So that's, if you have significant load, those dollars add up. That's a pretty significant savings. And just to kind of repeat that in table form, this is the savings for PowerBuyer against 100% day-ahead buying strategy. Here's your savings versus 100% real-time strategy. And the important thing to note is, from a risk standpoint, PowerBuyer advised clients during this period only to put about 50% of their, only recommended the day-ahead market about 50% of the time. So you're getting a cheaper average price than if you put everything into the real time, which is the most risky strategy, but your exposure is only half what it would have been in terms of number of hours in the real time. Oh, sorry, guys. Sorry, we had a bit of an interruption there. I want to just show the same analysis briefly just for the 3 months of the summer. And what you see here is the PowerBuyer performance actually was even greater from a percentage standpoint. So during June, July, and August, obviously, as you might expect, you would have seen higher prices for all of the buying strategies. But the savings against a pure day-ahead strategy by using PowerBuyer jumped up to 19.8%, and the savings versus a real-time strategy jumped up to 5.8%. And here's an important point here. We also looked at the number of what we call real-time blowout hours, and we identified those by hours in which the real-time was $50 or more above the day-ahead price, and calculated what percentage of those hours were avoided correctly by PowerBuyer. And obviously, if you're 100% in the day-ahead market, you're going to avoid all those hours in the real time. But even though only 50% or 50.4% of hours were put into the dam, clients would have avoided fully 2/3 of the blowout hours in the real time. So what I'd now like to do is actually pull up one of the reports. We'll show you what clients receive. We'll walk through the layout of those reports on a daily basis, and have Kyle walk you through the analyst summary. So just from a layout standpoint, clients receive this report each morning by approximately 8 a.m. Central Time. So that gives them, a full 2 hours before the dam closes to review it and to enter their bidding strategy. And it's laid out where we've got all 4 hubs: North Hub, Houston, South, and West, that you can navigate between. And then within each of those, we've got 3 different tabs. We've got demand and prices, we've got generation, and performance. We always start with a summary section, which is focused on the market drivers and the recommended buying strategy.
Thanks, Justin. Hello, everybody. This is Kyle Bissett. I manage the ERCOT desk here at Genscape. What we're looking at here is the North Hub Focus Report. As Hudson mentioned, there's a report that's specific for each of the different hubs. And the way that the page is set up here is we begin with our demand forecast. What you'll see in the top line of this table here is the Genscape load forecast, and that's proprietary to us. We have a team of nets here that do our own forecasting in-house. And you can see the hourly forecast here, and along with the peak hour. And you can compare that to the ERCOT forecast. So you can see how we differ in our forecast for tomorrow. And then that's plotted out here on this graphic here. The third table down is our dam cleared demand forecast, which, as you've probably noticed, the percentage of dam cleared demand as a percentage of the real-time load forecast is very low when you compare it to more mature eastern markets. So what we're doing is we're looking at days that exhibit similar patterns to the day in question, being the next day and the day ahead for tomorrow. And we're isolating a day out there percentage-wise that makes a lot of sense to us, and using that percentage on top of our real-time load forecast. You can see that this is the percentage of the dam cleared demand as a percentage of the real-time load forecast, and that's this axis here. So you can see that we're, for the most part, below 50% on that number. The second thing you'll notice is another table beneath here where I'm circling, and this shows our proprietary base case forecast for both the day-ahead and the real-time, along with our forecasted DART spread. So the first line of this table shows our day-ahead forecast for North Hub by hour. You can see the on-peak average and the off-peak average. And then below that, the second line is the real-time base case. So these are two different models. We're running a day-ahead model, and we're using the outputs from the day-ahead model as inputs to our real-time model. And you can see them side by side here and see what the forecasted DART spread is for both the on-peak and the off-peak period. Now, we start to break down the data based on what a rep would be interested in and the feedback we received. The first thing that we look at here is just the market call, and that's simply the cheapest market. You can say real-time, DAM, or neutral. The way we define neutral is $1 of potential purchase and savings, or $1 of $1 the other way. So a negative dollar DART spread or a positive dollar DART spread. Below that line would be your cost per megawatt hour, and you can see what it would be if you just picked the cheapest market that's the most value to you, what that average would be for both the on-peak and the off-peak. Now, towards the bottom of this chart, we start to identify the different risk levels. So with the real-time upside risk, what we're doing is we're quantifying the amount of potential upside when we run the model with an additional 1,000 megs of load. And what we do is we assign a value to it based on the percentage change from the base case model run. You'll see the key on the bottom of this right here where my cursor is. If it's less than 10%, you'll see it as a low upside risk. Between 10 and 20%, you'll see it as a medium. Greater than 20% as a high upside risk. And then if there is $700 or more of upside risk between the base case and the upside run, it signifies that we're hitting a cap for a settlement point price, and that would say cap here on the real-time upside risk.
And just to jump in, the next row here is what we call the risk-adjusted market call. And what that does is look at both the base case, the relative price between the day-ahead and real-time, and the upside risk. And it's a buying strategy that we've back-tested that's kind of the optimum combination of the base case price forecast and a strategy which avoids periods of the highest real-time upside risk. And so what you can see here, if you compare the simple market call and the risk-adjusted market call, if we take a look at hour ending 18, you see that in the simple market call we were advocating a real-time strategy, whereas when we factor in the real-time upside risk being high, that changes over to a DAM strategy. So this is what, and it's something that we developed in conjunction with a number of retailers. It's what they're using to kind of strike that optimal balance between minimizing their price and minimizing their risk.
The last line is the risk-adjusted. So this is the risk-adjusted market call, optimal cost of power for both the on-peak and the off-peak, so you can see how they compare to just the simple market call versus the risk-adjusted. When we issue the report, we benchmark ourselves against what ICE is trading at for performance. So we can calculate our performance when we see the day completely through. On the bottom right here, you'll see the ERCOT wind forecast. What we do on Fridays for Mondays is we provide our own proprietary wind forecast since ERCOT doesn't provide one. That way you can get a good idea of some of the things that are driving our models for a Friday, looking forward to a Monday, being the next on-peak day.
So can you just maybe run through just a summary of what we were calling for with the report that came out this morning, just what the drivers were?
Sure. So we were forecasting a DAM price of 27 50. It settled higher than that, but just before I walked in here, I saw the dam solution. And essentially, our argument here was that we were looking for very little value in going to the real-time tomorrow. The capacity number over the course of the last week has exhibited, has dwindled down quite a bit as wind generation's been so strong and wind's been driving down the real-time energy cost. So what we've seen is a lot of generation exit the capacity number that's on the ERCOT short-term adequacy report. So our concern was that even though this generation was leaving, we really weren't seeing the effect on price. The midday prices over the last 2 days really have struggled to get above $25, $26 over the super peak hours. So it was our opinion that if the wind generation was going to be ramping off today, we were going to have a situation where it would expose us. Now tomorrow you have a situation where the wind generation ramps off to be very low. In fact, it's below 800 megs near the peak hours of the day. So it was our concern that it would expose how some of that generation that came out. Tomorrow being a peak load day of only about 56,600 megs, it's not exactly a screaming signal to bring on some units. So the concern was when you factor in the large day-over-day decrease in wind and the small day-over-day increase in load, it ultimately ends up being about a 7,500 megawatt swing day-over-day. So there was a little bit of skepticism on our part that they'd be able to bring all that generation in between today and tomorrow, and that would expose us in the real time to some volatility or at least a negative dart spread for some of the hours in the early afternoon. And you'll see that here in this chart. This is where we expect to see the real-time print above the day-ahead numbers leading up to our super peak period. We've had a couple developments since we've issued the report. We've lost an 800 megawatt coal-fired unit, so it increases the likelihood that we're going to either have a negative dart spread for tomorrow with the real-time over the day ahead, or at least a situation where there's going to be very little purchasing savings by taking a real-time strategy.
So we'll just move quickly through some of the other charts. I think this is where most of our clients are really focused. They're looking at the demand forecast. They're looking at this price chart to see what the dart spreads are, where the hours of opportunity are. For a little more detail, the next tab shows the generation stack that is in our models for both the real-time and the day-ahead market. And here you can see you've got nukes, wind, coal, CCs, and then the steam and the GTs here.
And what you're seeing here in respect to the capacity number that I referenced before is this steam generation has made itself unavailable in the day ahead, but you can actually see that it is running in the real time. We have some of this steam monitored so we can confirm that. And notice that the axis is different for the day ahead supply stack versus the real time supply stack due to the participation level. And a lot of this data is DAM Energy sold data, but what you're seeing here is all proprietary generation that comes out of our own models here at Genscape.
So here's just more fundamental statistics of what we're showing in terms of the supply stack by fuel type, and then we also kind of put it against the 10-day rolling average. So you can see wind is down significantly from what we've seen over the course of the last 10 days, as is gas, but coal's up and steam is up, and we show the same for the peak demand hour. And then this is kind of a nice chart. This is showing the gen to load ratio for the 4 different zones. So you can see one is where a zone is in perfect balance between its generation and its load. You can see that the north zone is fairly close to balanced, and usually the number the line that's the most interesting is the west line, because that's really driven by wind, and you can see it falling off at about 8 a.m. and the west going into a pretty significant deficit position from a gen load standpoint. And then this right chart is the outages that are in the model. about 3 or 4 weeks ago, this you could have added a 0 to this, with all the units in outage, but now obviously pretty much all the units are available. And then finally, one of the kind of principles at Genscape is transparency, and so every day we include this third tab, which is performance, where we're showing you what we were forecasting on an hourly basis for yesterday. This would have actually been the report that was issued on Monday for Tuesday, and what the actual settled prices were for both the real time and the day ahead. So if you focus on this DART spread, the day ahead minus the real time, and again focus on the fact that it's conditionally formatted, focus on the red areas, you can see that we were calling for a real-time strategy for the 4 hours between hour ending 16 and 19. It's a little bit less important if we get the call right for an hour where there's a DART spread of less than $1 or $1 or more. But you can see then the actual DART spread lines up very nicely to what we had forecasted. So we were forecasting a peak hour of 17 with a DART spread of $16.50. Sure enough, it came in at $17. So directionally, we were correct here. And you can see, just from a summary standpoint, compared to a day-ahead buying strategy, if you had followed PowerBuyer, you would have saved $2.47 per megawatt hour on average during the on-peak period, and $1.66 during the 24-hour period. We were close to the real time. You would have actually done slightly better had you gone with the real time across the board, but that's available on a daily basis. So jumping back to the slides here, what I'll do is actually pull up. Let me pull up the survey results here, if I can figure out how to do this. So very interesting. So we've got 41% of you said weather and heat were going to be the single largest driver for ERCOT this summer, followed second by rule changes. 29% of you said that's going to be the largest. Third was risk-averse participant behavior, and fourth was record low gas prices. So there's probably no right or wrong answer here, and when you're, we can revisit this at the end of the summer and then see who was actually right. But we will go on record and let you know kind of what we think is the single biggest factor as we go into the summer. And it's actually that last point, the risk-averse participant behavior. Our feeling, and Kyle can add to this, is that number one, there's a lot of participants where the memory of last summer is still vivid in their minds and is affecting, and their risk officers are unduly influenced by that. What that does is cause load-serving entities to minimize their exposure to the real time, to avoid those blowouts, and conversely, we've seen that there's some large IPPs or generation owners who have increased their exposure to the real time to avoid missing out on those price spikes. And so our feeling is that may even expand the DART spread as we move into the summer, that's certainly behavior that we're seeing even as we look to the heat of next week. Anything you want to add to that?
I think that captured it.
Okay. So just to give you a little more detail on what clients receive, PowerBuyer clients receive. Oh, I'm sorry, I need to disable that poll result here. The service includes the daily reports, just like the one that Kyle walked you through, and those are issued by 8 a.m. Central Time, Monday through Friday. We also include the fundamentals, so the charts that go into our forecasts for wind and demand and the supply stack forecasts. We do cover all 4 ERCOT zones. We cover the hub prices for all 4 zones. And clients can get the data through the HTML reports that we just showed you, but also can get, first thing in the morning, get an IM blast that provides our on-peak averages. And that can be helpful. Some of our clients have indicated that that's useful if they're contemplating going into the bilateral markets. That just gives an indication of what our models are showing before the full report is prepared. We also include XML data feeds for clients. So some of our clients have set it up in a fairly automated way that they're able to use PowerBuyer to drive their decisions off the XML reports, or just use it to come into their data warehouse. So they have everything in their databases. And finally, it's set up and priced as an enterprise license. We don't charge on a per user basis. So just to go into a little more detail on the models, and we've touched on some of this that are behind the PowerBuyer product. It's actually the same model that's used for our flagship ERCOT Power IQ service. We developed our first ISO price forecasting model over 10 years ago, and this is the 6th generation model that we've developed. And with each successive generation, we've improved the performance, improved the accuracy, and also expanded the complexity of the models. So this includes 1,800 plus transmission lines and transformers, bid blocks for all the generation, 600 plus generators, most of which Genscape has real-time monitors on. As Kyle mentioned, we have a team of meteorologists, and we have a neural net that's doing the demand forecasting. That's something that we monitor the performance of very carefully, and over that same time period, it's outperformed the ERCOT demand forecast by about 7%, about 6.9% for next day. So when you see differences between Genscape and ERCOT's demand forecast, more times than not, you're better off believing us. We also have our own proprietary real-time wind forecast, which does include kind of the transmission limitations and curtailment assumptions. We do use the ERCOT wind forecast for the dam model, for the dam solution, but we use our own for the real-time. And a big part of what we're doing, what Kyle's analyst team is doing, is analyzing congestion, looking at transmission outages and the impacts, even down to the hour of when that congestion is going to occur and the price separation it's going to cause between the different hubs. So hopefully that just gives you a bit more sense of what's behind the model. This is certainly not a statistical model. It's a fundamental model. And I won't spend much time on this, but one of the other points to make in the daily process, the analysts here actually start their day at about 4:30 Central Time, and they begin their process every day with what we call recalibration, where they're starting by looking at what happened yesterday, what our model said would happen, and what actually happened. So obviously we have a rich amount of data on actual 5-minute prices, actual flows on many of the interfaces, actual generation by Genscape, and so we're able to recalibrate the model based on which units actually ran and didn't run, what the actual demand was. And that then becomes our starting point for moving forward to modeling the balance of day and modeling next day. So it really grounds us in having that firm understanding of what happened yesterday and the implications for the next day. So the final slide that I'd like to cover here is what we're calling just application profiles. We've now signed on a lot of clients to the PowerBuyer, and each of the different say segments of clients use it quite differently. The largest segment is retailers and munis. We've got over a half a dozen of the largest retailers in ERCOT using PowerBuyer, and also one of the largest munis in the state. And they're using it to determine where to bid their load for tomorrow. And they've often got three decisions as they're entering kind of the day before delivery. They can go to the bilateral market, they can put their load into the day-ahead market, or they can let some or all of it go to the real-time. Now, from one client to the next, there's a lot of variation in terms of risk policies and risk appetite and willingness to be exposed to the real-time. Some clients have a lot of leeway and can put a significant percentage of their load in the real-time for the hours or the on-peak period when we're showing that to be the optimal strategy. Others are really just playing with their imbalances. They like to be as flat as possible, but obviously imbalances are inevitable, and so they're just deciding where to put their imbalances with PowerBuyer. And the muni that we have also has generation and is using not just the PowerBuyer to determine how to handle their load for tomorrow, but they're also using our PowerIQ Balday report and our congestion analysis to help inform their bidding strategy for those units. Slightly different is how our industrial clients are using PowerBuyer. Some of them have a significant amount of cogeneration capability, and others are just load, just buying load. They're all using PowerBuyer at one level to determine when to buy or sell and into which market, day ahead or real time or bilateral. Some are using it to actually inform decisions on production, when to run their production lines and when to run their cogen. Obviously, there's other operational factors that are usually more important, but for some of them, their power cost is a very significant component of their overall product cost, and being able to time when they're producing to minimize their power cost has a huge effect on the bottom line. And some of them are also using PowerBuyer's capacity forecast to get advance notice on the likelihood of demand response events being called. They're participating in ERCOT's demand response programs and getting a very healthy check every month for that participation. And they have indicated to us that in every summary section they want to see what our model is showing for the amount of capacity that ERCOT's going to have tomorrow, because that has been shown to be a very significant indicator of whether an event is going to be called. So rather than them having to wait and only respond within a matter of minutes to ERCOT, it gives them advance notice. And finally, and this was perhaps the most surprising to us, we labeled the product PowerBuyer because we assumed it would only really be applicable to people who are buying load in the dam or the real time. But what we found is many of ERCOT's largest merchant wind operators are using it to help them determine when to put their generation into the real time versus the day ahead. I think historically the default strategy has been to put put wind into the real-time market, but obviously they're leaving a lot of money on the table by doing that 100% of the time. And so when we're showing day-ahead to be higher than real-time, that increases their revenues. Obviously, if they put too much wind into the day-ahead market and their forecast is off and the wind doesn't show up, they've got to buy it back in the real time. So they're also using PowerBuyer to understand the risk in the real time if they need to buy back in the real time. But we've helped a number of them work through the historical analysis. Obviously, they're selling their wind into a specific node and using PowerBuyer's hub prices as a proxy for the price at that node. But it's, for a number of them, proven to be a pretty compelling business case to justify it. So I think that covers all the slides. I want to just open it up to questions, and we'll take a minute just to see any questions that have come in from the audience. So we've got one which is whether clients can access historical reports, and the answer to that is yes. I won't actually bring up the report to show you, but on the left-hand side of the report there's a navigation spine that can be collapsed, and at the bottom of that clients can go back to view the latest 10 reports and access those. We've got another question about our wind forecast. How is that produced? The answer is that we actually developed a product or co-developed a product with WSI, with the weather provider WSI, called Windcast IQ. And it uses WSI's wind speeds at hub height for all of the wind farms in ERCOT, and our monitoring on a number of the largest wind farms to come up with what we believe is the most accurate wind forecast in the industry. And so that's used, and we also have good visibility on transmission constraints. So that's used to produce our real-time forecast. As I mentioned earlier, the ERCOT wind forecast is used for the day-ahead market. So we've got one more. Does anyone use your service for capacity predictions? Right now, we're not forecasting capacity markets. We only are doing LMP forecasting. So the short answer to that is no. I won't rule that out in the future, but it's not something that's likely to happen in the short term. So I think we'll wrap it up there. Again, thanks to everyone for joining us today. If you do have further questions, don't hesitate to email us. If you'd like to do a trial, we can offer a complimentary trial where we'll set you up to receive the service every day. You can contact myself or my colleague Susan Frocht at the emails and phone numbers here, or you can actually sign up directly on our website. And we will send out a PDF of all these slides to everyone on the call or everyone who's registered for this event. So thanks again.